On the 28th July 2024, Mr. Nitin Gadkari, Minister for Roadways, wrote a letter to the Finance Minister asking the Finance Minister to review the GST rate that is applicable on the insurance products. The arguments which were put forward by Mr. Nitin Gadkari was the government of India is imposing GST on uncertainties of life, and with this kind of a GST rate, it will hamper the growth of insurance sector. After that, there was a huge ruckus that was created in the parliament by the opposition party targeting the government of India. Certain clarification was provided, and very recently, that is in the 54th GST Council meeting, there was a discussion regarding the GST on insurance, and a group of ministers has been set up now. Hello and welcome to Unacademy IAS, a one-stop destination for all the English medium civil services aspirants. Welcome to another session of Economy Made Easy, and in this video, let's try and understand what are the issues that are related to the concept of GST on insurance products which has been imposed by government, or to be very precise here, the GST Council. But before I start the discussion, if you are interested to get coached by the top educators in India for the upcoming civil services examination, we have an offer for you. At a price of 24,999 rupees, you will get access to live sessions either in English medium or in Hindi medium. You will get access to the PPTs as well as the study material. You will get access to the mentorship assistance as well as you will get access to multiple preliminary test examination series as well as the mains test series. If you are interested, the link is provided in the description below. Please do check it out. Now, let me start the discussion here. First and foremost, very recently the 54th GST Council meeting was held, and in this 54th GST Council meeting, there is a group of ministers which has been set up under the convenership of Mr. Samrat Chaudhary to look into the matter of GST on insurance, and certain time period has been given to this group of ministers to submit the report very soon. Now, what are the issues involved here? Why there is so much of discussion regarding GST on insurance? Should we have a GST on insurance, or should we have a better mechanism to impose taxes on insurance products? Let's understand all those particular points one by one. The GST was implemented from 1st July 2017. It came into force in India from 1st July 2017. But even before this, that is before the introduction of GST, there are multiple indirect taxes which were imposed by the center as well as by the states. So, before GST, was there a tax on insurance products in India? The government of India says yes. Before GST was introduced, the services, that is essentially insurance is a service. It could be a medical insurance or health insurance. It is essentially a service here. So, it was deemed to be a service, and the services, specifically the insurance services, were taxed with the service tax of 15%. We imposed a service tax of 15%. Of course, many cesses were included in the part of 15%. Once the GST was implemented, this service, that is the insurance service, was brought under the ambit of GST, and as a result of this, the GST Council decided that the rate of GST now will not be 15%, rather it will be 18%. So, with introduction of GST, the services which are provided in the form of insurance services started attracting a higher rate of GST, that is a tax of 18% compared to 15% earlier. As a result of this, the outcome was very simple here. Now, when a customer will opt for, let us say, an insurance product and starts paying a premium, the price of the premium automatically will go up. because the higher tax rate is applicable now, the premium that the consumer has to pay or the charges that the consumer has to pay to get insurance services automatically increased. And in recent times, many of the companies which are offering the insurance products, they also have increased the charges or the premium that they are collecting from the customers, or let us say the people trying to opt for insurance products. Now, let us try and understand certain important aspects of the topic here. Point number 1, in case of India, more than 2/3 of the hospitals which are run are essentially the private sector hospital or run by the private sector entities. And by the virtue of these being private sector hospital or private hospitals, a lot of times you must have seen there is no regulation over what is the pricing of the medical services which they provide. Generally, the patients in these kind of hospitals can be the patient who is admitted into the hospital or simply can be an outpatient. So, in either of the cases, lot of these charges or very high charges in lot of the cases are imposed, and it becomes a burden on the common man. It becomes a huge burden on the common man. According to a survey which was conducted, listen to me carefully, in case of an admitted patient, around 30% of the total expenditure is incurred for purchasing medicines. Around 30% is incurred in purchasing medicines. And if you are an outpatient, that is essentially you have come for a treatment and you are not admitted, you are simply will visit the doctor and go home. If you are an outpatient, in that case, the amount of money that the patient will spend on purchasing medicines will go beyond 55%. In some of the cases, it is even 60% as well. So, a lot of money is spent on medicines. There is no regulation over the pricing of the services which are offered by these hospitals. And in many cases, people will not be able to afford these kind of, let us say, the pricing which is imposed by the hospitals. Now, in order to protect ourselves, in order to protect, generally what has happened is, over a period of time, more and more people are opting for insurance. More and more people are opting for medical insurance, and being worried about the future, more and more people are also opting for the life insurance as well. But please understand, with implementation of GST, the tax rate on the insurance products increased, and it is said along with this, with higher inflation rate in the last couple of years, the insurance companies had to increase, the insurance companies ended up increasing the charges or the premiums that they would be imposing and collecting from the customers. And what is the impact of this? According to a survey which has been conducted, please make a note of this. According to a survey, that is a Swiss RE Sigma report, in the year 21 and 22, the penetration of insurance in case of India, that is essentially 4.2% of the population purchased insurance products. And in the year 22 and 23, this has actually come down to 4%. It has actually come down to 4%. That is one very important point. Point number 3 here, the Government of India as well as Insurance Regulatory Development Authority of India, IRDAI, have been arguing for higher penetration of insurance products, especially in rural India, to ensure the out of pocket expenditure by the households whenever there is a requirement of a healthcare treatment, etc., will be very lesser, will be limited. And precisely for this, IRDAI has set up a target of 2047 to ensure there is insurance available for all. Insurance for all. So, IRDAI has set up a target of 2047 to ensure that insurance products is availed by everyone in India. So, these are certain 4 very basic points associated with the insurance sector in India. Now, let us do the evaluation. Why is the government, or let us say precisely GST Council, has been imposing GST, and what is the need to withdraw GST? Let us do a comparison here. So, what is the need? What is the need to impose GST on insurance? Point number 1, the Government of India, that is specifically Finance Minister, in the Parliament categorically stated that even before GST, insurance used to attract taxation. We used to impose a service tax earlier. Now with the introduction of GST, no doubt, the tax rate has increased from 15 to 18%. There is no denying in the fact that it has increased. But more importantly, the Finance Minister pointed out that out of 18% GST that is collected by imposing the GST on insurance products, half of it will go to the states, and within remaining half, that is 9%, which goes to center, it becomes part of the divisible pool. Again, out of this, based on the recommendation of the Finance Commission, certain amount of money is given to states. So it is not the center which is collecting majority of the revenue by imposing GST on the insurance products. In fact, it is going to the states. So argument of the Finance Minister was, earlier also there was a tax, and moreover, insurance is a service. So we will keep on imposing taxes on the goods and services under GST and collect the tax receipts. That is the first argument. Second argument, how much money has been collected by imposing GST on the insurance products? According to the government data, in the last 3 years, the GST which has been collected, the GST on insurance products which has been collected is more than 24,000 crore rupees. More than 24,000 crore rupees for the last 3 years. Not a small amount, a substantial amount. Third very important point regarding the GST on insurance product, third very important point is, the states are arguing that, the states are simply saying that they do not have sufficient amount of GST receipts after the GST was implemented from 2017. Now the Government of India is saying, if you want more and more tax receipts, why are you arguing against GST on insurance products? If you ask me to withdraw the GST, first and foremost, Finance Minister said, Government of India unilaterally cannot take a decision on the GST. Why? Any decisions regarding the GST has to be taken by the GST Council. It has to be taken by the GST Council, not unilaterally by Government of India. So now in the GST Council, they have picked up this particular matter and they have set up a group of ministers for this. But the argument here is, if the states want the GST on insurance to be, let us say, reduced to 0, automatically the amount of GST revenue collected will go down. And if the GST revenue collection will go down, with lower revenue collection, the amount of GST collected by the states will also go down. In that case, why are they basically saying on one side they are not earning sufficient amount of GST, and on the other side they want the GST on insurance to be reduced to 0. Right, so that is one more very important point regarding the debate that is happening regarding the GST on insurance. Now on the other side, why should Government of India, or let us say GST Council, review the GST on insurance? Why should the council revamp the GST? Point number 1, please understand, the healthcare expenditure has increased in recent times. In the month of December, there was a report which was published regarding the inflation in the healthcare sector. The inflation in the healthcare sector by end of December 2023 was more than 14%. Basically means the prices in the healthcare sector have increased by a huge number, and in many of the cases it is much higher than the core inflation rate in India. So when you have a very high inflation rate in the healthcare sector, it essentially means these are becoming very costlier now. In order to protect from the rising cost or the rising prices of the healthcare services, people need to buy more and more insurance products. But if you have a GST rate of 18%, which is applicable right now, automatically the amount of payment that the consumer will have to pay or the buyer has to pay will also keep on increasing. This will push away a lot of consumers or the buyers of insurance products. That is the first very important reason why the government needs to review. Second very important reason, first one is what? Basically we need to promote these kind of products in the market, okay. Second one is, understand this, in case of India, as I already mentioned, the Insurance Regulatory Development Authority of India, IRDAI, has a target of ensuring by 2047 everybody will have insurance products in India. If the GST rate is reduced, then automatically the prices will come down, and when the prices will come down, automatically more and more people will be affording, will be buying such products or insurance products in the market. It will help us in achieving the objective of higher insurance penetration, higher insurance penetration, okay. Third one, when the GST rate is 18, the companies will increase the prices, and with a rate of 18%, the overall charges paid by the buyer of insurance will be much higher. If lesser and lesser insurance products are purchased, it will definitely have an impact on, growth of the insurance sector. It will definitely limit the growth of the insurance sector. That is, there is no doubt regarding that. Fourth one, as Mr. Nitin Gadkari stated, why are we imposing taxes on certain uncertainties in the life, right? Accidents, healthcare, etc. These are accidents, these are uncertainties in the life. Why is the government or GST Council imposing a tax on uncertainty? So, do not impose taxes on uncertainties, let the people purchase more and more insurance products. So, these are some of the points in favor of having GST rate on insurance and against having GST rate or promoting review of the GST rates on the insurance products. Now, what is the way forward here? What can be the way forward with this kind of a stalemate? What can be the way forward? Many of the experts have argued that Government of India might use a differential GST rates, right, on these insurance products. I will repeat it. Why doesn't government have differential GST rates on the insurance product? Differential in the sense, up to certain limit, if the buyer is paying certain amount of money, let us find out what are the kind of products which are purchased by the common households, insurance products of course. So, within that, up to certain limit, let us reduce the GST rate if they are paying a premium, right, in this range or below this, and if the premium paid is above certain range, above certain limit, let us have a GST rate of 18%. So, why not have this kind of a differential GST rate for different types of products based on the threshold, etc., etc. So that when a common person, a common man purchases such insurance products, they will not be facing higher GST burden. That is the recommendation which has been provided by various experts. Now, we will have to wait and see what will the group of ministers look into, what will their recommendation be. So, this is basically the discussion that has been happening in the last couple of months regarding GST on health insurance as well as life insurance products. Now, based on the discussion, let me solve an MCQ here. If you want to solve the MCQ, please hit the pause button, you solve it and then you can see the solution discussion that I am going to do now. Consider the following statements. The government so far has not allowed FDI into the insurance sector. This statement is wrong. Why? Earlier, insurance was increased, was allowed up to 26%, that was increased to 49%, that has been increased to 74%. So, when the statement says FDI is not allowed in the insurance sector, it is wrong. Second one, the complete amount of payment of insurance premium is a tax deductible. Complete, underline the term complete amount of payment. Whatever premium you pay, is the complete amount tax deductible? Absolutely no. First and foremost, in the new tax regime, this is not allowed, and in the old tax regime, certain limits are there for senior citizens as well as non-senior citizens. So, even the second statement is wrong. So, which of the above statements given is or are correct? Right option is option D, neither 1 nor 2. Okay, so this is basically the discussion I wanted to have with all of you regarding the debate around GST on insurance products in India. If you like these initiatives which we are doing for your benefit to clear the UPSC Civil Services examination, do hit the like button. If you are yet to subscribe to our YouTube channel, kindly do it now. Thank you. Have a great day.